All right, guys, last charitable giving strategy I'm going to talk about is the qualified charitable deduction. Now, this is maybe in the future. Maybe you have parents that are at this stage and you can pass this tip along. But this has to do with required minimum distributions. Remember, at the age of 72, the IRS forces you, they calculate an amount and they force you to take out money from pre-tax retirement accounts. Okay, so an IRA, pre-tax IRA. So they calculate it and you have to take that out. When you take it out, you're charged income, right? If you're also receiving Social Security, all of a sudden taking the RMD amount out could tip you into the point where you're paying Social Security provisional tax. So you're not only paying additional income tax, but all of a sudden you're paying tax on your Social Security benefit as well. And it can be a huge jump in taxes. Not good. So this strategy helps mitigate the impact that taxes will have on required minimum distributions. So essentially what you do is instead of taking the distribution and reporting it as income, what you do is a qualified charitable deduction, a QCD, where you take the amount and you send it directly to a charity out of your IRA. This does not work out of a 401k, just IRAs. So you take the amount, let's say they've calculated it's $15,000. You can take the $15,000 instead of withdrawing it and donating it, for example. Again, this works if you're already going to donate money. If you need that income to live, then we're not talking about it. But if you're already donating, this is a way to donate and get extra benefits, double benefits. So let's say it's $15,000 is your RMD and you want to donate all $15,000. So you directly from the IRA send the $15,000 to a charity. Two things happen. Number one, you get credit for the full deduction. So $15,000 deduction against your income. Number two, you don't realize any additional income on that money, on that $15,000. Usually if you take a distribution from your IRA, it counts as income. In this case, it doesn't. So let's say your income is like $85,000. If you take out the $15,000, all of a sudden your income is $100,000. And then you could donate it and drop it back down to $85,000. Well, in this case, your income's $85,000, you donate the $15,000, you do a QCD directly to the charity. So your income is still $85,000, but you get a $15,000 deduction. So all of a sudden your taxable income is $70,000. Okay? It's double benefit there. It's really cool. It doesn't always make sense. You have to look at your overall tax situation to see if it actually does make sense. But a lot of times it does, and it can make a huge difference on taxes. Maybe going from $85,000 to $100,000, all of a sudden half your Social Security income is taxable. And that adds on additional tax. So you're strangling your cash flow and paying more taxes with a higher income. Okay. So that can make a huge difference, right? Instead of $100,000 of income and a $15,000 deduction, you don't add any income, but you get a deduction. Okay. So massive benefit for QCDs. Again, this is in the future. So a bit out there, but maybe pass this on to people you know that are at that age period. Say, hey, you might want to look into that. Talk to a tax professional, get some advice. So that is the QCD, Qualified Charitable Deduction. I love this strategy. It works so well. Used it many times with clients. All right, that wraps that up. See you guys in the next video.
The more we understand, the more we can give with purpose.